Listen to me, because I am going to tell you something that could save your retirement from a massive, hidden financial disaster. I know you are scared. I know you look at the volatility in the stock market, the headlines about inflation, and the global uncertainty, and you think, I need a safe haven. I need something real that I can touch. And right on cue, the TV commercials, the radio ads, and the internet pop-ups start screaming at you, protect your hard-earned money. Roll your 401k into a physical gold IRA before the dollar collapses. They play on your deepest fears, making you feel like if you don't move your money into gold right now, you are going to lose everything. But I am here to give you a major reality check, because the truth about gold IRAs is that they have become one of the most expensive, high-fee mirages in the financial world. If you are retired or about to retire, you do not have time to make a massive financial mistake and recover from it. You need your money to protect you, not to be drained away by predatory fees and empty promises. So ask yourself the question, why is a gold IRA no longer a good investment? It comes down to three brutal truths that the slick salesman will never tell you: the income trap, the fee illusion, and the devastating liquidity friction. First, let's talk about the absolute reality of what you need in retirement. You need income. You need your money to grow, or at the very least, to pay you dividends or interest so you can buy groceries, pay for healthcare, and live your life. Physical gold does not pay a single penny of dividends. It doesn't pay interest. It generates absolutely zero yield. It sits in a dark vault, completely stagnant, and the only way you ever make money on it is if someone else agrees to buy it from you down the road for more than you paid for it. When you lock your retirement nest egg into physical gold, you are giving up the incredible compounding power of dividend-paying stocks or reliable bonds. That is a massive opportunity cost that a retiree simply cannot afford. Second, the fees will absolutely eat you alive. When you open a regular IRA at a major brokerage, your setup is usually free, and buying an index fund or an ETF costs you nothing. But a gold IRA? Oh, it is a completely different, expensive animal. You have to pay a one-time setup fee, an annual administrative custodian fee, and because the IRS strictly forbids you from keeping this gold in your house, let me repeat that, you cannot store it at home without triggering massive tax penalties. You have to pay a specialized depository annual storage and insurance fees just to hold it. But that's not even the worst part. The biggest drain on your wealth is the spread. This is the difference between the wholesale price of gold and what the dealer charges you to buy it. Unscrupulous dealers out there are pushing seniors into exclusive or collectible proof coins with markups ranging from 35% to over 100% above the actual melt value of the gold. That means the second the ink dries on your contract, your $100,000 investment is instantly worth $70,000 or less in actual market value. You are underwater from day one, and gold has to double in price just for you to break even. And what happens when you turn 73 or 75 and the IRS forces you to take your required minimum distributions? You can't just chip off a piece of a gold bar to pay your bills. You have to sell that gold back to the dealer, who is going to buy it back from you at a discount, or you have to pay massive shipping and insurance fees to have the physical coins mailed to you, which then creates a massive tax headache. The liquidity friction is staggering. So, what is your actionable takeaway today? If you want the safety and protection of gold in your portfolio, you do not need a complicated, high-fee, physical gold IRA. Instead, open a standard, low-cost traditional or Roth IRA at a traditional brokerage. Inside that normal account, you can buy a gold-backed exchange-traded fund, known as an ETF, like GLD or IAU. These funds track the price of gold perfectly, they have zero storage fees, zero setup fees, and you can buy or sell them instantly with the click of a button for zero commission. Limit your total gold exposure to no more than 5% to 10% of your total portfolio as a small safety hedge, and leave the rest in productive, income-producing assets that will actually fund your retirement. Do not let fear drive you into a high-fee trap. Stay safe, stay smart, and protect your cash.